What's going on, traders? Welcome back to another video. What we're going to do is we're looking at ABIO. This stock blew up today. This stock is up 386% on the day. So should you buy it? No, probably not, because the stock will most likely crash pretty soon. Tomorrow we might have some more movement on it, but nonetheless, it's probably going to crash pretty soon. So let's get into this stock. So before we even look at the chart, I want to show you guys probably one of the most important things that you need to know in order to even consider a stock can make a run like ABIO did on the day. So the first thing I'm going to do is I'm going to pull up finviz.com here. So if you don't know, finviz.com is finviz.com. You put that into your URL and you're probably going to come up with a pretty useful stock website to get some information from. If you didn't already know. But what we're looking at here is these two categories right here: share float and shares outstanding. If you're new to the market, the number one most important thing that you need for a penny stock to make really fast, big moves is it has to have a low float. Low float's pretty much anything below 20 million. So below 20 million, you can really categorize as a low float. Anything above 20 million, you're starting to get into what we would say is a medium float. All right, so the next one above that is shares outstanding. Now, this is extremely important. Shares outstanding is very, very important for dictating or considering a stock can even have a move like ABIO did today. Again, it's not every day a stock goes from $3 all the way to $22 in a day. It's just usually not normal, but it does happen every once in a while. And when it does happen, most oftentimes you're going to come to find that the stock, one, had a really low float, something like 1 million, 2 million, 3 million. And then secondly, it was coupled with a very, very low outstanding share count. So shares outstanding was really low, like maybe 1 million, 2 million, or 3 million. Anytime it's like 5 million and down on the shares outstanding, coupled with a low float, then you could say that that stock has the potential to have one of those really big runs like a 386% day. So if tomorrow you wake up and you're looking at a stock and you go, can it have a big run? Just go to finviz.com, look at the float. If it's not really, really low and the shares outstanding aren't really, really low, then you already know it's not going to have that 386% day. Just not going to happen. Maybe have a nice jump here and there, but don't expect, a $10, $20 run, okay? Just not going to happen. Okay, so those are the two most important characteristics that you're going to need in order to even have a stock run like ABIO did. The third thing that you're going to need is you're going to need the stock to have some sort of relevant news tied to something in the real world right now. What did this stock have tied to it today? Let's see. COVID-19 news, what everybody wants to hear. So ABIO Pharma announces AB201 development program for treatment COVID-19 associated with something that I can't pronounce, some medical term that probably means that I'm just can't pronounce it, smarter than I am, I guess. So with that being said, stock had really good news today. Stock had a low float and low outstanding shares. These are the chemical combinations that you need in order to make a stock run 386%. So just remember that, okay? Now, what I want to point out is a couple things in the chart earlier that happened today that I know a lot of traders get faked out by sometimes. So I want to help you guys here. So what we're going to do is we're going to remove our volume system down here. The volume system we have down here pretty much separates buying strength from selling strength. So we know when things are getting ready to stop and things are getting ready to reverse. But if you were watching this on your chart and you had up the regular volume, it would probably look something like this. And I'm going to help you, I'm going to teach you a trick here with just this volume system. So if you didn't have the special crazy coded system we have, it's fine. Don't worry about it. But the one thing that could signal a really nice move is going to come here comes from psychology and then the understanding of volume, okay? So in the market, you have two types of traders, people that trade up and then people that trade down to make money. So again, there's always a push and pull going on in the market from buyers and sellers. And so whenever we have penny stocks run really big, normally they're going to crash, okay? And since normally they're going to crash, a lot of traders tend to bet on the downside that they're going to tank, okay? But when those traders are wrong, they're going to end up getting squeezed out and then a big move to the upside will occur. So watch this, right? Stock holds, we jump, we go on a really big move. At this point, traders thought it was done moving, so they all shorted this top. And they had good reason too. This had a nice move up, and at the time, it was in the selling cycle on the day. It was at resistance, and there was a bearish divergence that occurred here on the relative strength index. So there were many signals and reasons to be short bias here. So the traders that were short here, they weren't wrong. They were actually right for taking a trade there. It was a low risk setup with an opposing argument in the market of a divergence. So it would make sense to go short there. But this thing was so strong in the day and yada, yada, yada. Watch what happens to the stock as we trade sideways for the day. Look at the volume. You will notice that the volume is high, and then it slowly decreases to the point where we even had a period of time where there was almost no volume, right? If you look at that chart, there was almost no volume, right? We had to zoom in so close that we could then pull it up that now you can see them. But if you were zoomed all the way out on your chart, it would almost appear as if there was really no volume occurring there. So you went from really high in the millions, 500,000, all the way to practically nothing, okay? If people are betting the stock down and they're hoping it goes lower, a stock can't go lower if no one's participating. If nobody's selling the stock anymore, it's not going to go lower. So take a stock that's $3, has a really big jump, attracts everyone, COVID-19 news, low float, low outstanding shares, and we'll talk about what that means, low outstanding shares, in a second. And then volume thins out as everybody is shorting, it's going to go up, okay? That's called the short squeeze. So you'll see that we have this big move up. We top out. People get bearish. They short the stock down. If they're wrong, they cause it to go the opposite way. So they get short around, let's say, 15 or so, where this white line is. And then it trails off and all the volume thins out. There's nobody participating anymore. So if nobody's selling it, all that really takes is a quick jump to the upside to start making all those bearish short sellers panic out, and we go on a rip. So part of the reason why the volume thinned out here too, right? Part of the reason why the volume thinned out is because there was low outstanding shares. Low outstanding shares means this. Well, outstanding shares means this. Outstanding shares refers to investors, CEOs, right? CFOs, people within the company, on the board, right? People on the inside of the company that own shares that can still sell them to the open market and sell them onto the market. So when you have a low outstanding share count, that means that there's not a bunch of these hidden sellers located in the market from the company that can just dump a bunch of shares onto the market and cause it to not go up, right? So for example, let's say the outstanding share count was 40 million. That means at the midday time period, there very well could have been a lot of insiders in the company like, hey, I'm still willing to sell here at $11, and they just keep dumping shares, and of course the stock's going to get diluted and it's going to go down. But if you have low outstanding shares, then you don't have those hidden sellers, not necessarily hidden sellers, right? But you don't have that additional selling pressure that you could potentially have if the outstanding share count was high. And so what I'm telling you is you will only see runs like this. These penny stocks will only run when they're low float and low outstanding shares because it eliminates the possibility of extreme selling pressure coming in from people that own shares in the company, CFOs, CEOs, investors, private equity, people like that, okay? So that is probably the most important thing you'll have to know about stocks like ABIO. So for tomorrow, we're going to be watching this stock. The short sellers are going to come in tomorrow, but it doesn't matter. There's always a good bounce, and there's always a good drop, and there's always a good bounce. So tomorrow, we might continue running. It's very possible. So we'll stay watching it long bias first, okay? But if by tomorrow we wake up and the stock is at 29, if you wake up tomorrow and this is anywhere near 29 to say, 35, then the stock is going to be overextended and you're probably not going to want to be considering it long. But if tomorrow we wake up and the stock is somewhere down 15, 14, 11, then we're going to want to look for a dip buy, guys. And so just as a reminder, feel free to join our free watch list. It's really nothing crazy, honestly. I can't say I'm a genius for this, but we put ABIO on the watch list. So this is just something we send out each day to get everybody kind of, ready for the market. It's super simple. It's just kind of like a quick memo. Here's an example. Dear traders, today we are still bullish on the market. Yesterday there was a curveball dip, but the market still got bought up. So for the last, couple days on YouTube, we've been watching 310, 311. And then these were a couple stocks we sent out. But ABIO was one of them on the watch list because this morning we recognized it was low float, low outstanding shares. It was worthy of being a candidate on the watch list today. So this is absolutely free. All you got to do is go to boilerroomtrading.com, as you see in the URL there. Free, join it if you would like. That might help you keep you guys up to speed if you're driving to work one day and kind of want to know what might be moving in the market, okay? So I hope you guys liked the video. I'm going to be coming out one right after this with the penny stock GNUS and explaining what happened in that midday crash. So everybody stay tuned, and I will see you guys on the next one. Take care.